Hello everyone, my name is Bob. So welcome to the WikiBit podcast series brought you by WikiBit and Xapo. WikiBit is your go-to platform for all things blockchain, offering the latest global blockchain news, regulatory license check, industry scandals, insights, credit information, operation, and more, helping investors make informed decisions. In our series, we will invite experts in the blockchain world, diving into the industry developments, exploring trends in the crypto field, and seeking out the top-notch opportunities through the channel. So today, we are delighted to have the Seamus Rocca, the CEO of the Xapo Bank, join us. Seamus, welcome to our channel.
Thank you for having me, Bob. Pleasure to be here.
And we will be discussing the evolution of the Bitcoin banking sector and the current trend in the BTC industry with the Seamus Rocca. We appreciate your support and ideas. So let's kick this off by learning a bit about your background. So can you just tell us a little bit about your background?
I'm originally from Gibraltar, which is in Europe, and I spent most of my career in banking. So I used to work for Credit Suisse, then I worked for Macquarie Bank, and then Standard Chartered in very senior levels in finance. And then in 2017, I joined Xapo Bank as the CFO, and I helped the bank. At the time, we were a Bitcoin custodian, and I helped Xapo get a banking license, and then turn from a Bitcoin custodian into also having a bank, so that people that had Bitcoin like myself and wanted to keep it somewhere safe could also interact with the financial world and be able to earn interest on dollars, make payments, use debit cards, and ensure that our Bitcoin could be used with the current day financial service world. So we are essentially a Bitcoin custodian that became a bank because we, as Bitcoiners, had a need to have banking services. And as you know, most traditional banks don't want to touch crypto.
Yeah, so from what you say, with that you have rich experience in the traditional financial industry. Yeah. So what attracted you to join the crypto world and how you got into your current line of work?
When I left Standard Chartered, I was fairly senior in the organization, and I think I'd always had a background of working in large organizations. And in large organizations, it's very slow and difficult to have an impact. It's big organizations with hundreds of thousands of people. You've got to get a lot of different buy-in and go through committees and approvals, and things take years to move. And I wanted to work in an environment that was much more nimble and fast. So I wanted to work in fintech. And then when I started looking at crypto and Bitcoin in particular, I felt that Bitcoin was something that could change the future of finance. Bitcoin was something that, in the same way as the internet and transformed information and the way that we consume and handle information, and a lot of innovation came from the internet. I also felt that Bitcoin was something where traditional finance could learn from and innovate from. So for me, working at Xapo, it was a perfect way of me using my traditional finance experience, but also all of a sudden making that jump into this new world of blockchain and Bitcoin in particular, which was my personal passion more than just crypto in general, and figure out a way as to how can I could bring those things together. So Xapo Bank was a perfect place for me to work.
That's great to hear. So in fact, with more and more people entering the crypto industry, so the first step for users, especially like our audience, are the banks. So what advice do you have for our audience when choosing a crypto bank, or aspects should they pay attention to in order to avoid the risk? Or you
Sure.
can also just tell us about the advantage of the Xapo Bank.
So I'll tell you a little about how we operate and how we reduce that risk for our customers. So if you think about a traditional bank takes your deposits in fiat, pays you very little interest, and then they're using your deposits to lend to other customers. So they're lending your money into mortgages, car loans, what have you, because that's how they make money. You charge more on the interest of the loan than the deposit, and that differential is how a bank is making money. The problem is that then you can run into a liquidity issue. So if all the people want their money back, the bank doesn't have it because it's lent it all out. So our bank is a very simple bank. We just take customers' deposits and say, hey, well, what if we actually, whatever interest we earn in US treasuries and money markets and very low risk assets, and we just paid a lot of that back to the customer. We just keep a little bit on top because we need to make a bit of money to cover our costs. But then the rest of it we can pay to the customer. And because we haven't given lots of loans and mortgages, our bank doesn't do fractional reserve banking. We have almost zero risk, you know? So essentially, when you open up a Xapo bank account, you have a dollar bank account, which is highly capitalized. And instead of having mortgage risk, because most banks lend to other people, what you essentially have is US dollar risk, if that makes sense, because that's how your money is invested. So one of the things you always need to look out for a bank is how much capital have they got, how liquid are they, and essentially how much risk are they taking with your money. In our case, we take almost zero risk with your money because it's all invested in AAA plus dollar denominated assets. And then on the Bitcoin side, because of course what we do is a bank that gives you that dollar account and issues debit cards, but then also we have a VASP that does your Bitcoin custody. On the Bitcoin custody, what we essentially do is we keep your Bitcoins off balance sheet. So we have a ledger of all the Bitcoins that we hold on behalf of our customers. When you send us a Bitcoin, we don't own those Bitcoin. Essentially, we're holding it on your behalf. So from that perspective, even if we went belly up tomorrow, we still have a record of the Bitcoins that you held with us, and we would have to give them back, and we have a regulatory obligation to do so. So the biggest advice I can give to people when they're looking for, somewhere safe to keep their Bitcoin is today the only options you have are exchanges and self-custody, like Ledger or what have you. And if you think about, Binance or Coinbase or all the exchanges, they're not banks. They're not capitalized in the same way as banks. They don't have the same regulation as banks. They don't have the same rules about, keeping you risk-free. It's more like an IG Markets type platform where they're allowing you to trade. And one of the things that I would caution people around is, a lot of crypto companies call themselves crypto banks. They're not crypto banks. They're exchanges pretending to be banks. We are a real bank because we have a banking license. And that's a big difference, right? And then on the Bitcoin side, it's the same. A lot of exchanges or self-custody, they're not really set up in a way to hold your Bitcoin to keep it secure on your behalf. They're actually set up to allow you to trade. So from that perspective, they keep a lot of the assets on hot pools so that have enough liquidity for you to be able to trade. And it's very difficult to keep your Bitcoin secure if it's in hot wallets, as opposed to in cold storage. So I think that there are loads of risks with that. Why people might be comfortable with using exchanges, but there's also lots of risks with that. I would caution people to do their homework, do their research, to make sure that they fully understand where it is that they're keeping their money.
That's very commendable. And we all know that the Xapo Bank is a renowned private bank known for its innovation and user-friendly features. So besides established in 2013, the bank has experienced 3 cycles of a bull and bear market, right? So after so many years of deep involvement in the Bitcoin banking industry and driving the industry forward, could you just tell us about the journey of the Xapo Bank?
So Xapo Bank started in 2013 as a Bitcoin wallet. And we raised $41 million from Silicon Valley investors. And our founder, Wences Casares, I think he'd done such a good job of convincing Silicon Valley on the positives of Bitcoin that not only did they want to invest in Xapo, but they also wanted to buy Bitcoin. So we keep them safe. So the first thing that we developed was the custody product. So that's, when we decided to start investing in security, and we were best known at the time for our, Swiss bunkers and the way that we, kept our keys in different multiple locations to keep them secure. So we started off not only being a wallet, keeping it safe, and then we decided that, well, actually, if we want more people to own Bitcoin and then to be able to transact with the traditional financial world, we needed to build a bridge to that traditional world. Back in 2014, 15, it was very difficult to buy Bitcoin. It's much easier to do it today, but back then it was super difficult. So we felt that, well, if we built our own bank, it'd be much easier for people to be able to buy Bitcoin via that bank, but also when they want to sell some of their Bitcoin because they need to transact with the traditional world. They need to live. They need to, buy groceries. They need to pay school fees. They might want to go on holiday. So we felt that building a bank next to this Bitcoin custody business was really necessary if we want to Bitcoin to go mainstream, if we wanted normal people who didn't necessarily understand the technology or didn't trust themselves with self-custody, how can we build a product where my mom and your mom would be able to do so without having to be technical? So we embarked on a journey of getting banking licenses in 2016. It took us 3 years to do it. And on that journey, not only did we get a banking license, but we needed to get access to SWIFT. We needed to get access to be able to issue Visa and MasterCard. We needed to work with correspondent banks. So that's been a very long journey in terms of making sure that the bank feels like a bank that can offer, basic banking services, but bridging it to Bitcoin, which is how we started off as a Bitcoin custodian. So where we are now is we feel like we've now got a really good product to go out to market and make sure that people, the product never went away, it was always there. But we feel that now it's in a state where we can go out and market it and let people know that it's there. It's a great product for them to use, somewhere safe to keep not only their dollars, but also their Bitcoin, be able to save and invest all in one application and one platform. So it's been a very long journey. It's taken us 11 years to get here. But we finally feel that we've built a really good, solid bank for Bitcoiners. So we're not a traditional bank that decided to jump into Bitcoin. We're Bitcoiners that decided to build a bank that could serve them.
Impressive. And I think the audience will know a lot from your sharings here. And to be honest, the Xapo Bank is not only at the cutting edge of technical innovation, but also strive to the private users with a secure and reliable service. So your efforts in driving the Bitcoin retail banking industry forward have, in my opinion, have played a vital role in the promoting the widespread adoption and application of the cryptocurrencies. Thank you very much for your insights. So here comes to the next part. We will discussing some topics that the individual investors may be particularly concerned about regarding the current trend in the Bitcoin industry. So especially for this year, the Bitcoin has experienced two significant events. One is the approval of the 11 BTC spot ETFs and the Bitcoin, the halving. So could you just share your insights on the current state of the Bitcoin market?
I think, the Bitcoin market at the moment is feeling very positive and optimistic. I think, for those of us who have been in Bitcoin for a while, the longer you've been in Bitcoin, the more Bitcoin bull runs you've seen. And there's never one single event that has led to a bull run. It's always an accumulation of things. And at the moment, it feels like, well, with the whole advent of the ETFs, with the halving, the fact that we've been in a crypto winter for a while, it just feels like there's this pent-up demand that's coming. And ETFs were a big instrument in opening up that demand to institutions. So I think particularly with a name like BlackRock and Fidelity opening up to ETFs, it just shows how far Bitcoin has come as a validated asset class. It speaks for a lot that companies of that size and that stature would go out to market saying, you know what, Bitcoin is a thing, and I think people should have access to it. And by buying it via an ETF, it reduces a lot of the risk to the holder. So particularly if you're an institution, it makes it very easy for you to, if an institution's treasury might decide to invest in certain asset classes, they can now just invest in an ETF and get exposure to Bitcoin. So, of course, all this institutional demand that was pent up has been able to come into the market. And then, of course, with the halving, we've seen before that it's never immediate, but after a halving, there's always a period of consolidation. And then, of course, the price starts to go up because of the reduced number of Bitcoin available to the market post the halving. So it just feels that, it's not going to be something that we're going to see in a day or two. And that's sometimes the expectation with these things, that the price will go up and shoot up immediately. I think what we're seeing is a consolidation, and we can probably see over the next 10 months, a slow but steady increase in value. And then I suspect that at some point next year, things will cool off, will probably come down from a new all-time high, and there are some of the naysayers, some of the negative people in Bitcoin will go, oh, you see, I told you Bitcoin has come down. But the new average is definitely going to be significantly higher than what the previous average was, which is probably around $40,000. So the next new average might be 70, 80, $90,000. We don't know. But what we've seen is that if you look at the cycles of Bitcoin in the past, there's always that trend. You hit an all-time high during a bull run that normally lasts 10 months. And then, yes, it goes down considerably, but that new average is significantly higher than the previous average. So the upward trend over time is still there, and we still see Bitcoin as a medium to long-term investment asset class.
Oh, okay, so here is the last question. So actually, with a large amount of capital inflow and the reduction of inflation, so the price of the Bitcoin surge past is very high before the correction recently. The Bitcoin the ecosystem is also experiencing a boom with the rest of the layer 2 solution, right? So in the context of the Federal Reserve maintaining the high interest rate, so what factors do you think are affecting the price of the Bitcoin? And what aspects of the news should the investor pay attention to?
Keeping track of what's happening in the traditional financial world is always important. And there are many people out there that try and predict the price of Bitcoin. And unfortunately, I wish that were possible, but I would caution towards, trying to put too much emphasis on factors that are going to directly affect the price of Bitcoin. Because one of the reasons why we love Bitcoin is the fact that it's not government controlled. And therefore, from that perspective, is based much more on supply and demand factors and how much interest there is in buying Bitcoin at any given time than there is on more traditional macroeconomic factors. Having said that, though, I think what we're probably seeing is now with the ETFs and institutions coming into play, people might have borrowed money to invest in an ETF or Bitcoin, and therefore, if rates come down, they might find funding cheaper. So that might be positive from the point of view that people might feel more aggressive in terms of some of those allocations into the asset class. But I think a cutting of interest rates will be the first signal that the Fed starts seeing that inflation is under control. And I think if the world starts to feel that inflation is under control, there's probably going to be a much more positive macroeconomic outlook. And that can only be a good thing for Bitcoin, but not just for Bitcoin. I think for all asset classes. I think what we'll see is as the Fed starts to cut rates, I think the investment appetite will probably go up overall. And if Bitcoin is now a legitimate asset class, I think Bitcoin will do no different.
I think we can just sum up is that in the current the Bitcoin market, it's essential for us to keep a close eye on the market dynamic and make the rational investment decision based on the advice of professionals like you, right?
Well, look, I just want to qualify here that I don't give professional financial advice. I can just give you my opinion. As a banker of 25 years, I think my opinion is as good as anybody's, but it's not financial advice. I'm just giving you my view.
Yeah, thank you. Before we just warm up the interview, especially for me here, I just want to express our heartfelt gratitude once again to the Mr. Simmons for sharing his insight and appetite with us. So his in-depth analysis and the industry experience have given us a deeper understanding of the development history and the current market trend of the Bitcoin banking industry. So what's more, I'd like to thank you all the audience for tuning in. So if you have any burning questions or just want to chat about all things crypto, don't be shy. Drop us online and we will be there faster than the Bitcoin transaction. Thank you, guys. And thank you.
Thank you.
Thank you for your time.
Thank you, Bob.